Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Hey, thanks for putting up with us during all these issues that we're working on. We're just trying to make it better, and we only made it worse, but we're going to get through it. If you're joining us for the first time, this is the Closing Beat, quick stock market update show that we go over the good, the bad, and the ugly. And speaking of ugly, that NASDAQ quote and the Russell 2000 quote, maybe we could change that or fix it on the main screen. But we'll go over all the different stuff here for you. We also got a research page that we're launching here very shortly. If you're interested in a lot of the data, particularly some of the stuff I'm going to share with you today, we're going to start moving this over to a research page. We want to hire a developer, to be perfectly honest with you. That's where we stand on this. And so we thought rather than just ask you guys to open an accounts and everything, if we could offer something to you, maybe you'd find it worthwhile, participate, and we could then hire a developer. So if you check out the website there, you can go to jazzwealth.com/research. If you go all the way to the bottom, you can read about it, kind of see the different things that we do and we'll be offering there for you. And then, hey, we'll, hopefully alert you when it's ready a week or two from now, and we'll be able to kind of provide this stuff to you. I'm going to go over a lot of cool stuff today with you, but first let's start with the stock market. The stock market a little bit lower today, and I'm going to share probably the most interesting thing that you've seen recently, because the stock market actually did exactly what it was supposed to do today, and I'm going to show you precisely how the computers and everybody that's acting in the market knew the same data and responded to it. Whereas maybe if you didn't know it, this is the kind of thing we'll teach you on the research page as well. But anyways, we'll go over to take a look and see what's happening. You got the Dow down just a little bit, S&P down a little bit on the day. The NASDAQ was the stronger of the groups today, starting to pull away again a little bit like it did in May, meaning the performance. It's starting to get a little bit more ahead of some of the other indices there. I'll go over to it real quick so we can take a look and show you something interesting. There you go. You got the NASDAQ almost back to those highs again. Like I said, it's just starting to pull away a little bit. If you look at some of the stocks inside of there today, Amazon, a good day, up 1%. It was the biggest contributor to the gain in the NASDAQ today. You had Microsoft higher on the day as well. Some notable names we'll talk about a couple times here. You had NVIDIA. Semiconductors were strong today. Oh, Netflix, there we go, up 2.6% on the day. And so that really helped the NASDAQ overall be one of the better performers. The Russell was your drag. So we'll go over to the Russell. It was the worst performer. Just can't get over the 200-day moving average. If you like the technical analysis, that's your spot, your line in the sand, your sort of spot where you're wanting it to wake up and do its thing. Financials and industrials, which were strong, were the ones to weight the index back down today. That's okay. We know they had a good run inside them. The smaller financials. I don't mean like your Goldman Sachs. We're talking about Russell 2000 here. So these are your smaller companies. If you want to look in the industrial space today, you had Enphase, big down day, 26% for them. This is an industrial stock, so that one was a little bit lower on the day and naturally did weight on everything. And then you got Glacier. It's a regional, or smaller than a regional bank actually, down 7% on the day. And so, yeah, that was just some of the things that weighted there. A lot of these, aside from what we just showed, had good moves, and so they pulled back just a little bit. Anyways, you've got Mr. Jerome Powell talking in front of Congress today, a little bit different. He's kind of going off what he'd been normally saying, where he wants Congress to act to get their sort of fiscal house in order. Today, he was saying generally that Congress should spend more money, really, to keep the economy going, saying that the more you spend on the economy, the better things are going to get. It was sort of a nod to the infrastructure bill that we saw yesterday, proposed by the White House there. And so that's what you have. Now, by the way, yesterday, if we go over to the charts here, yesterday on the S&P 500, I'll focus on this here for a second while I maybe teach you something. We had a big move higher yesterday, and I highlighted the type of move that it was relative to what we've been seeing normally, and how that was kind of a interesting time for it to happen. We normally don't see those types of moves unless we are down near lows or near highs. So yesterday's closing beat covered that. Sorry for the audio, but at least it worked, I guess. All right, so anyways, what I want to share with you here today is the expectations going forward. Part of what happens when something rare happens in the market is looking forward and saying, well, what's the historical odds of something happening? So what we did is we said, okay, Yesterday, we had a really strong gap higher, and actually the stock market started 2% higher, and we said, okay, that's an odd event. I shared that with you yesterday. 56 times as of yesterday that's happened since the SPY started trading 1993. If you don't know, the SPY is the original ETF. It is the grandfather of all ETFs. That is the very first one that's come out. So if you're ever looking for lots of data, you're going to use the SPY. Anyways, rare event for what happened yesterday. What we then wanted to do was say, okay, if yesterday was weird, what's today supposed to do? Because you know the algorithms know this. The computers, the automated systems, the big companies, they know this information. I'm going to prove it to you in a second. So anyways, next day, average performance down minus 0.65%. Remember that number. The median performance minus 0.34%. That's over the next day. Percent of the times that it's positive is 40%. So we already went into today with the odds being it was going to be a negative day. And as far as how negative it was going to be, just a slight down day, not a big deal, following the day like we saw yesterday. Here's the performance over the next week and the next month. That's not really what I'm trying to focus on today. What I want to show is the intraday performance of the SPY. Here is all day for the SPY. The dotted line right down the middle is 0, the flat line. We started a little bit higher today, went negative, a little higher, a little negative. Every time we tried to go higher, we got sold off. Built up a little steam there into the afternoon, but eventually sold off into the close. And wouldn't you know it, where did we stop? Where did the market stop? 0.062%. Let's go back a slide. 0.065%. That's very, very close. You would probably agree with that, right? So very close. Why did the market stop at that very exact spot? There was no support. There's nothing. There's nothing to go on in here other than the algorithms, and everybody knows that today the average performance is about what that is to the downside. Anything more would not be worthwhile selling into because it's not supposed to do more than that. So when you look at a day like today, you go, today was an expected day. It was an average expected day. Nothing different was supposed to happen. And there you go. That's your lesson of the day. I thought that would be pretty cool to share with you guys. It doesn't take long to share that with you. I hope you found that interesting to check out. Anyways, our FinTips video from Monday was how to improve your dividend investing if you're interested in that sort of thing. Today, we talked about avoiding international funds. And I do want to stress that I was talking about those were averages. Those were not picking on individual funds. There are certainly funds that could perform better, some that perform way worse, but we were using the average to say if you were an average investor that just picked whatever you had available to you, what are the odds that you would pick something that performed quite well? So we shared that with you. And Friday, we're going to be talking about a new 401k roll strategy that you might consider if you're unemployed during the virus downturn there. So something to look at. Tomorrow night, our class for customers, we're actually going to study bull market pullbacks. So we're going to say we're in a bull market. We know that. Pullbacks that have happened in this bull market and what to expect going forward, as well as looking back at all the prior bull markets that are very similar to this one and showing how it relates to history, really. So that's that one. Let's go over to our sector breakdown here for the day. We'll take a look at some of the things going on. If you look at the individual sectors, well, tech led the way today. Wasn't all that impressive. I'll go over to the charts for you, and we'll take a look. You got tech leading. Oh, no. XLK, that's the symbol. Leading the way, did pull back towards the end of the day and after hours down just a little bit there. Energy really stands out as the weakest, by far the weakest sector of the day here. But keep in mind, it's had a very strong run. So we at one point were up over 100% from the virus lows. We're still up 11% for the last 1 month. But yeah, we've pulled back here. So it's just kind of a normal pullback. Nobody's really scared of what's going on there. Inside the tech sector, which is we'll use the XLK today, you got Microsoft, a little higher today. They're going to continue to keep their stores closed for now. Semiconductors, you could use the SMH if you want to fine tune and look into some other things there. They were the strongest out of the group overall. You had Lam Research, LRCX is the ticker symbol, making new highs there, 2.7% higher on the day, and Applied Materials higher as well. NVIDIA. Oh, no. NVIDIA. The ticker symbol had a good day today, up 2%. Got an upgrade from Jefferies. In fact, a lot of the upgrades that you see today in the or a lot of the better performing stocks are due to upgrades. NVIDIA is one of them. Jefferies got a new price target, $415 for them. Not so bad. Energy, well, we talked about that a little bit lower on the day. Chevron and ExxonMobil, those were some weak ones that stood out. Down 2%. For Chevron and Exxon down just over 3%, pulling back to the 50-day moving average there. Those two were the biggest drags, and those two stocks, by the way, are starting to slip back into this chop zone here. You don't like to see that if you're hoping for higher prices on those. Valero was one of the bigger losers, down about 6% on the day, got downgraded by Goldman Sachs. They did keep their price target at 68 bucks, however. They're essentially saying over the next 12 months, they're looking for a little bit of a chop there. And Schlumberger was the only stock in this in the energy sector to be positive on the day. If you look back on Monday's video, FinTips videos on YouTube, we actually talked about this stock and the performance of it relative to another stock, ExxonMobil. So you might want to check that out, give you a little heads up of what's going on there. Cowen upgraded the stock to $22. So that was one of the reasons why that stock was higher and stayed higher throughout the day. Healthcare, which we spent some time talking about yesterday, gave you a great rundown of how to look at individual stocks there. It was basically flat on the day. In fact, a lot of the stocks that or sectors that were flat weren't all that impressive, just slight down days there. A little bit of continuation early on this morning. It's about halfway between the highs and the lows. So that halfway point always acts as a little bit of, hey, was the glass half full? Is the glass half empty? What should we do? So you expect to see a little resistance there. Abbott Labs higher by 1.2%. This was one of the stocks on our list from yesterday, kind of trying to move out of this very obvious and clean downtrend there. So that's that one. If you take a look at bonds, we'll go over to short-term, long-term bonds. You got prices moving a little bit higher today, yields moving a little bit lower, and I've got an interesting thing to share with you here. We go back over here. We'll take a look at junk bonds. HYG is a junk bond ETF that you might want to look at, or you might have on your list, or you might be invested in here. These guys participate in corporate bonds known as junk bonds or high-yielding bonds. I put the top 25 on there for you just so you can see the types of yields. Now, you're going to look right here, actually. This is the weight, how much of their cash they've allocated to it, but you're going to want to look here, like Teva, 3.1%, Altus, Sprint, etc. You could see through. You could look through all of them. There's, in fact, 1,106 positions that they have inside of the HYG. Why I want to point that out is because HYG, compared to its normal competitors, tends to be a pretty good ETF to use if you like the junk bond space. I'm not suggesting it, by the way, just pointing it out to you. But what's interesting about it is that it tends to perform as well or better than its competitors during the good times, but it tends to perform not as bad or less than bad as their competitors as well. So it's kind of known for being that one where you're getting outperformance usually on the upside and the downside relative to the other choices that you have, which is a good thing because its expense ratio is about 0.5%. Well, you think of it as, all right, I'll pay that, right? If you're telling me I can do a little bit better sometimes on the way up or in line or basically the same, but I'm not going to perform as worse to the downside, I'm interested in that. One thing you want to keep in mind, the dividend yield is exciting there, but the max drawdown, if you're looking at this on day-to-day basis, the volatility is not so bad. However, it did participate quite aggressively to the downside with that virus there. The reason I point this out today is because of the money that's going into this. It's not my suggestion. I'm just showing you the dollars flowing into this junk bond ETF. What you have here is since the virus declined there from February 19th, which this is the performance up at the top here. There you go. There, February 19th. That pullback there, they lost about $6 billion, meaning the money flowing out of it and moving wherever it moved to was to the tune of about $6 billion, which is no joke because the stock's about a $20 billion fund, right? So that's a lot of money to leave there. Now, we've got, obviously, Fed with their easy money policy and everything. But over the last month, the HYG has added $10 billion. That means people have bought $10 billion worth of this junk bond fund. Compare that to some of the others, and here you have the one that wins. They've added the most all over compared to the other ones there. So just something I want to point out to you. I don't know if that's helpful or something you want to take a look at, but maybe that's where you want to look. I don't know. All right, transports. There you go. Transports basically flat on the day. Airlines essentially took the day off. Southwest Airlines was a little bit lower on the day. They're said that they are seeing negative impacts on passenger demand. I tend to disagree with that just a little bit, and I'll tell you why. So we studied the TSA screening patterns last night. Didn't have a chance to put anything fancy together for you there. Passenger volumes, meaning people going through TSA security checkpoints, are actually studied. They are you can find the data on TSA's website. Still down 80% year over year. Severe drop, just a severe drop in the number of passengers there. However, it is up nicely since the virus lows there. And if we were to project out to see how things are going and improving, kind of slowly moving up this hill, you very easily see where we could be back to 50% by September. right? So Southwest is seeing some of that weaker demand right now. You don't hear that from some of the other airlines at the moment. Makes you wonder what's going on there, because when you look at the number of passengers going through checkpoints, that's increasing and getting a lot better as we speak. So something to consider there. Yep, in general, though, the news today, the airlines just took the day off. You got Spirit Airlines lower on the day, American Airlines little lower on the day. You could see that strength in today. What you would do is look at that and say, American Airlines was not down as much today. Southwest, Spirit, those people that said they're seeing weaker demand, they were down as much. Meaning the people traveling through TSA checkpoints could be American, United, whatever. Is that business travelers? What's going on there? So maybe some more data to come. We'll keep expanding on that if we can. Oil down just a touch today. It's all just basically quiet. Oil down 1%, 37.93 a barrel. Very quiet here. Oil inventory showed a slight uptick in the overall amount of oil supply out there. Weren't expecting that. Gold, there you go. Gold basically just flat. We've been talking about this pinching tight pattern here, basing sideways, very bullish pattern. Hasn't broken out yet, but just something to take a look at. We'll go to our technical breakdown today. You have 10 new highs on the day. It's going to be a lot of familiar names, right? Adobe hitting new 52-week highs. That thing is a beast. Electronic Arts, also a beast there. Sticking with the gamers. You got ATVI finally breaking back to new highs. Looking pretty strong there. Autodesk, names that we've been talking about. They did pull back on the day. I want to point out to Tractor Supply hitting new 52-week highs. Very tough breakout to buy, but basically you could see a little bit of a breakout there on Tractor Supply. And Apple back to new 52-week highs. Although it did pull back just a little bit, you got Apple there. A couple stocks that we'll talk about here. ConAgra. There you go. So you got ConAgra with a series of highs here. It's a very sloppy breakout potential, but it is working on it. So it's just something I want to keep on a watch list here. We'll talk about it. And then Hologic. This one's really interesting. If you don't know Hologic, they do surgical supplies, diagnostic type products, things like that. They're in the healthcare space. But anyways, look at this series of highs here. It has one of the stronger analyst ratings out there in its category, strong earnings growth, strong net profit margins overall. So fundamentally, you could have an argument for looking at this stock. It obviously had an amazing recovery off of these lows. That's impressive there. And it remains at these highs. So the question here is it too late to buy something like this? It's hinting at a breakout, but you like to look at breakouts when you have the market's momentum by your side there. And as you know, we go back here and we look at this over the next week and next month, aside from a few ones that stand out, over looking for history there, the pressure is just slightly to the downside. So that makes it a little bit tough to say, I want to play a breakout. I don't know. Maybe the market's changed and there's more momentum to the upside. It seems you can't stop this train lately. So I thought I'd put that on the list. And that's just some of the stocks there. We go over to stocks in the news there. There's a lot of this going on. Oops. DraftKings, there you go. DraftKings just basically flat on the day. They're going to sell 14 million more shares. Speaking of selling shares, Hertz, the SEC, their words, not mine. The stock was halted today because the SEC basically made Hertz stop their plan to sell the 500 million worth of shares. They said that the average retail trader is not smart enough to skip buying this garbage, right? That's a tough one. You know, I've been ragging on them for the last couple days. Now you kind of get the gist there. The SEC's involved, and I don't mind when SEC's looking over there and they're not looking over here. I'm happy, so it's good. Facebook's going to allow you to turn off political ads. What do you think about that? Are you going to turn off political ads so you don't see them on Facebook there? Well, I don't want to get into that. Norwegian Cruise Line is down 8%. They had to cancel some more of their cruises. Not all of them, but they're going to cancel some more of their cruises until September. Beijing, there's a lot of weirdness going on over there. They closed their schools the other day. They are now halting flights because they're seeing a severe uptick in the number of viruses there. If you work at Target or thinking about working at Target, $15 minimum wage starting in the middle of next month, something to consider. And H&R Block. Whoa, we talked about this one. Stats are so important, and I'm going to share one more with you here. But look, H&R Block, we mentioned this the other day, 2 days ago. We said on the closing beat, we're talking about when H&R Block has some reason where investors respond positively to earnings, it's not that exciting. It doesn't just tear off and have these amazing moves. However, when people find a reason to react negatively, it is nasty, and I shared that data with you there. Analysts have basically said after them reporting earnings that this is a lost tax season for H&R Block. Shares were down 10% on the day. Those stats that we shared with you, holy cow. I mean, it's good to know that going into a stock like this, right? If you know it's going to behave pretty badly if things are down, you get a heads up on that. So I love sharing that with you. I'll share one with you here. Here's Kroger. All right. You got Kroger reporting earnings here for the second quarter. They're going to report tomorrow. You can see the stock basing sideways. We know they've been a stronger stock through this whole virus issue, not only fundamentally, but also the stock has held up very nicely. Over the last 18 years, the average second quarter earnings gap puts it higher by 2%. So it tends to gap higher by about 2%. But here's the kicker. During the day of earnings, it fades away. Right? If you look at where it starts and where it finishes, it tends to finish a little bit lower there. Only 33% of the time. When it gaps higher on earnings, it gaps higher by 2% on average. Only 33% of the time over the last 20 years does it finish higher than where it started, meaning this is a stock that likes to fade during the day. If you're a day trader, that's of course the kind of thing you want to know. If you own the stock and you've been waiting for your moment to sell it and you think they're going to do well on earnings, if you see it gap higher, the odds are that morning price is going to be one of the better prices you're going to see. Not telling you what to do with the stock, just pointing out a couple things. I'm a stats guy. You notice how I point out the stats, and that helps keep me out of trouble there. So Kroger reporting tomorrow, also JK Solar reporting as well. You got American Tower paying out $1.10 in dividends, and you've got Advanced Auto Parts paying out a quarter ex-dividend day today. You got a lot of changes going on in the S&P 500. You also have DocuSign taking the place of United in the NASDAQ there. So you may want to pay attention to that. I mentioned them on Monday. I went through every specific one. Harley-Davidson, Nordstrom, and Advanced Digital getting booted from the S&P with a handful of stocks replacing them there. So maybe we'll cover that on Friday because that doesn't take effect until the 22nd, actually. All right. Also, next week, we're hoping to go live again. And if you like some of the data and research that we try to point out here, check out our research page, jazzwealth.com/research. It's not live yet, but if you leave your email, we'll email you one time to let you know that it's up and ready. We will not spam you, save your email, anything like that, or sell it. There's no tricks in there. Also, put a very clear terms and conditions so you know we're not messing around. You guys know us by now. If you play Guess the Dow, you know we don't... there's no gimmick here. Anyways, hey, I'll wish you a great rest of your day. I think we'll wrap it up there, get this thing posted, and thank you so much for watching, and see you later.